You think I wouldn't butcher your name after having spoken with you for like 15 years, Jessica?
It's okay. There was a name change. It's fine.
You could just call me Ryan Sullivan. It's fine. Jessica, call me Pete, whatever you want. Jessica, what is the primary thesis behind Netflix?
I mean, for us, we initiated coverage or reinstated coverage today, and we see a lot of value from here. Numbers have come down to a reasonable level across the street. And we think there are two areas where the company can really beat numbers and have tremendous upside. And that is AVOD, or the advertising video on demand platform. And the second thing is password sharing. And we are super, super bullish on the advertising opportunity. As the company says, they're going to crawl, walk, and then run. So they're starting on their broadcast tier, which is really small. That's the tier that you can't download on, and you get one stream. And they'll learn a lot from that. We think there's massive advertiser demand. Remember, these are subs that they're reaching outside of the linear universe. So these are big cord cutters, cord nevers, or people who are watching streaming, number one. And there's just such intense interest from advertisers. So we think that as they start to roll out to the standard and premium tiers, there's tremendous upside. That's not in our numbers. And they're hiring extremely well from digital advertising companies. You know, they're hiring well, and we think they have a Microsoft guarantee. So we think there's tons of upside above and beyond our estimates. And the second thing that we really have not built into our model is this password sharing. Who doesn't know somebody who is sharing a password? And there's 100 million non-paying users across the globe. 30 million are in U.S. and Canada. And if they pay $2, which the company initially will charge, that's a lot of money. But if they can convert some of these to subscribers, because they put them off, there's tremendous upside.
Yeah, so it sounds like, I mean, at the basic level, Jessica, that the worst may be behind Netflix. I mean, I know it's overly simplistic in some ways, but it's been a slow bleed for about 10 months. Feels like maybe that wound has been healed.
Well, I mean, the chart that you just had, we had in our report, shows Netflix's reach versus other media companies, and they dwarf everybody else, and they have not had advertising. They're also going into live programming, which is what drives advertising. So if you look at Fox, they way outperform the rest of the industry because they have live news and sports, that chart, which I think is fantastic. It just tells you how much viewership they have, and they haven't monetized them at all. And the advertisers are dying to get in. So between live and the ability to get in, they'll have 4 to 5 minutes an hour, which is not a lot compared to 15 minutes plus on linear. It's a real opportunity. It'll be targeted and addressable. So it's really great. And I think the other thing that hasn't really come up is that they're turning free cash flow positive. So this year they'll have $1 billion in free cash flow. Our projection is over the next 3 years that will be $4 billion. So it's explosive.